Good day. Ira Epstein with your SPDR ETF wrap-up, and this wrap-up is for Monday, the 7th of February, 2022. All right, my friends. We're looking at a day where, again, you're beaten up in Facebook. It just keeps coming down. A lot of articles are starting to appear in different publications that I read as to now we're getting into the value area of Facebook. I don't know if that's true or not true, but some of them are going through a lot of numbers to prove the point, not charts. The mathematics, where they're at in the finances, the amount of cash on hand, securities on hand, market share that they have for what they specifically do, even if they say they're losing some things, where they're at. So you're starting to get that. You would expect that's going to be the exercise, and it may prove to be very true. But in the meantime, it keeps weighing on the market. You were down about $15 in Tesla. Amazon up a little bit, and yet Apple down. Now, you know, Peloton is up for grabs as everybody's talking. Should they buy it? Shouldn't they buy it? But if they go chasing each other, even though the stock's fallen about 80% in value, what are they getting? Does it fit in with their business models? Blah, blah, blah. The gold market picking up again. You know, we have inflation. You can't argue that inflation isn't here. It's here, and it's here in a big way. And the question is, does it back off? Be it meat prices, be it grain prices, automobiles. And talking about automobiles, I write about it in my full research, how we're looking at light trucks and how well they sold in the month of January. They literally exploded. But at the same time, Ford just announced on Friday that they're closing 8 plants because of chip shortages. So you still have that story. But on Friday, even though they announced that, one of their operating officers came and said he believes that 2022 will be the turn where the chips, that deep shortage we have will be mitigated. Doesn't mean we won't end up the year somewhat short, but it won't be anything like it is right now. A little bit of hope there. When you look at Facebook, here's your story. I mean, it just collapsed from 336 now down a third. 224. That's the way to look at it. So in all of a week, you've lost a third in value in the company. Does it still have value there? That'll be the question. You now have the market 3 days under the lower Bollinger Band. It's ripe to move to the right-hand side. You rarely go beyond 5. Let's talk about Bank America for a minute. I want to get rid of Bank America, so I need you to help me. Today's the last day I want to cover it. So I always ask you, we start on a Tuesday covering a new stock, which will be tomorrow. Write to me what you'd like me to cover. I'm not going to cover things that are 2 and 3 time multiples. So I know you want me to do those relationships. I'm a futures trader. I'll give you 90% multiples. Trade the futures markets, but I'm not going to give you those. So it could be a stock. It could be an ETF. Let me know what it is. My criteria is that it has reasonable trade volume and good following to it. Is that fair enough? And we'll cover it for a week here. So all you do is on YouTube, let me know about that. And while we're talking about this coming Thursday, I'm going to have my What's Up live webinar again. It fills right away. If you haven't received your invite already, it means you're not on my mailing list or you're blocking the mailing if you think you did that. I've sent it. That's what I can tell you. In the meantime, you take your cursor, bring it up to the top of the page, an icon will appear, click on it, fill out the form, you'll get your invite. As I said, it's limited seating, so it's first in and then people get locked out. That's just the way it is. The other part of this, I do not record it to put on the website. I record them, but I don't record them to put on the website. Got it? So I follow my NFA rules and everything else, but you either attend or you're not there. I open the chat room at 12:15. I start the meeting promptly at 12:30, and it ends 20 minutes later. We cover a lot of territory very fast. Okay, so as you can see, you've come up nicely in Bank America. You've got a trend that is still nicely to the upside. You get a pattern where you've got the bullish moving averages. You've got the 18 over the 100 over the 200. On pullbacks, I'd look for support into that 18. In terms of resistance, you're getting very close now. Any move to the upper Bollinger Band should be about where the market has a serious issue on this particular rally because it's already overbought. Doesn't have to get there. You're already at what I call window envelope numbers. They're that close together. I know where they're at, and I think the pros today at the window envelope began taking some money off that. In Apple, excuse me, I think you're in that consolidation phase. We had that wonderful pop on all the earnings that they came out, their forward guidance. It was just phenomenal. You had that big pop. Now you're in the consolidation phase. You're a bit overbought. You could easily pull back to 168.70 and determine from there the next move. But you're into what I call this wobbling back and forth. In XLF, the financial services, well, I like them. The question is what happens with the curve yield? Will there be enough in there for them to make money? The way they're compressing it down, there may not be. That's the big thing that has held some of this back, the KBEs and the other. You got to keep your eye on that, but it's still bullish. I see good support, 39.47 to 39.25, but I don't think you're going to attract new buyers right now because you're overbought. So you didn't get high enough to take much money off the table. On the washout, you saw that the Bollinger Band and 200-day average, powerful. They basically stopped the decline. Then the market fought back to the 100, the 18, and it's giving you a little more juice. But be a little careful up here. Disney, this is about all I was looking for in the rally. You went back. This is what you call a bear market rally. You're under the 18-day average of closes. You're oversold. To work it off, you get a rally. And as I've taught you, the 18-day average is your line in the sand. That's often where markets go to figure out what they're going to do next. So I see the resistance point being that. In XLI, while you've got the trend up with higher lows, higher highs, you're under the 18-day average. So the bias is down. That wipes it out. If you got a rally, there's very stiff resistance from 102.13 to 103.26, the 200-day average, and 103.27, the 100. And everything's lined up fairly bearish right here. You've got the short-term average underneath both these numbers, and you're probably going to get the 100 to get under the 200 in a day or two here. So be watching that. Still not the prettiest of charts in any manner. In the semiconductors, you're coming back into a key resistance of the combination of the 18-day average and the 200. That's a lot of resistance for the market. Now, if you were to close up over 210.99 to 11, say, that would be a nice figure that I think you'd have no problem then making your way up here. It's what you do here. Should you go back under 194.62, I think a break then into the 182.5 opens up the door for that possibility. In the home builders, you still have lower highs, lower lows. You have a market with readings under 30 that aren't going under 20. So you're staying oversold in the marketplace, lower high, lower low. It's hard to do anything in an oversold market. Resistance, if you get a good rally back to 74.62, about $3 higher, you'd have to clear 75.13 to say, hey, that leg to the downside has run its course. Haven't done that at this point. On the energy sector, you keep bumping up against the upper Bollinger Band. Now, the Biden administration waived, I didn't see anything in the news until today. They did this on Friday. Apparently, they waived some sanctions to make it easier for the Iranians to digest the meeting tomorrow. Another leg of this treaty meeting begins in Vienna tomorrow. So what the U.S. did, from my understanding, is they said that for non-armed nuclear development, civilian, how do you prove that with the Iranians? But for civilian, they're going to take off and allow our partners, Germany, France, whatever country want to be part of that treaty with them, to not face U.S. sanctions. Okay. The Iranians said it immediately, it's not enough. We want all sanctions removed. Then we want a period of time that they'll determine. It'll be relatively short in their words, because I was reading their statement, at least the translation of it. And they'll see if the U.S. lives up to its word. Just the insult. If we live up to our word? Okay. Who's turning off the cameras? Who's doing everything they shouldn't have been doing? I mean, you got to laugh at this stuff. It's not real. All right, but there you go. By the way, what if the Biden administration gives into this? Do you think they would get another term? Do you think the American public would be behind that? Maybe I don't have it right, but I don't see it. I think that I think our president has enough problem with the polls than giving the ship away or the house away to those people. In GLD, higher lows, higher highs. You're over the 18-day average of closes. What about up here? Well, you're certainly can get there. You're back into the bull mode. The market had its test of all these numbers. You're moving higher. I read an interesting report today by a person talking about cycles, which I used to be a cycle student. I took many courses on it with a guy named Walt Bressert. I don't know how many of you know him out there, but he was phenomenal on his cycles. Robert Prechter. So, I've studied them over the years. Gann angles. Got into all that in my career. I found it too esoteric for me. But I do like the cycle part because you can almost look on a chart and count days. And what he was saying is if you go back and you look, the market is currently paying attention to a 20 and 72-day cycle. I looked at it. He's right that I'm seeing the same thing he's seeing. So I like when that's pointed out. So what he's feeling is this rally up here isn't the rally, that the market can then pull back into April and then a real rally of merit might begin. Cycles do that. They give you time frames. In GDX, okay, I told traders today that if they were short this market from here, and because we had talked about it in my morning subscriber video, they have to have a break-even stop. Can't let the market go anywhere on you. That's basically what happened. Okay, why did I say that? Because you're back in an uptrend. Suddenly now got higher lows, higher highs once you poke through that. So the first objective, the 100-day average, but now you've opened the door up. Once you open that door, if you can clear these numbers, why not get up here? So I think the pros are going to turn bullish on this right now and see if they can press on it. I think they'll throw in the towel if you get back under 29.94. It's just my thoughts on what I think they might do. XME, I said today I thought that this market might be bullish again, and I still think that. You have to get back under right here. The lows of Friday, and that was 43.66 for me to get nervous. Other than that, I see momentum up, the trend up, the higher lows, higher highs. You've opened the door for, I think, higher prices, but you always have to have your number you're wrong at. And if you were a buyer into that zone in the 4,400 level, it certainly wasn't much of a risk. Copper. So we're now through with the lunar holiday, and the Chinese traders are back. First thing when I got up this morning, believe me, I'm up 3:34 in the morning, aluminum prices were up like that. Copper didn't quite go with it, but as the futures market opened, they started anticipating that. The trend is up, but you're fighting right into the resistance zone. You need to close over 38.85 to get friendly, and if that occurs, you open the door to 41.12. You wouldn't want to get back under 37.64. No sell signal, the possibility of buy signals. TLT, still bearish. So the market is still working on this. Some traders, I'm hearing people saying, oh, this is just the beginning. We're going to go way beyond 2.25%, 2.5%. Others are saying, a lot of this is built into the marketplace already. It's going to be up to the Fed to prove it. The market could be getting ahead of itself. So you're getting all those arguments. When I look at the market, there isn't a trend. There's certainly a downside bias, but you have a higher high, lower low. And last in FXE, I could see where profit taking is going to happen now. I can see the argument that up at the 100-day average to the upper Bollinger Band, professional money saying, what a beautiful run. I saw Miss Lagarde in her press conference today. She had one early in the morning, and she's clarifying and cleaning up what happened last week. It's data dependent. It's a big change. Originally, it wasn't data dependent. They didn't see anything to make the market move this year. Now there are things on the horizon that might make the bank move, but they'll be data dependent. So that's called cleaning up her statements. Okay. Again, we're going to have the live webinar. That's going to be this Thursday. I will open it at 12:15 p.m. We begin promptly at 12:30 and we end at 12:50. So if you come in late, first of all, you may not even get in. A lot of the seats get taken, if not taken up. And if you do get in, you've missed a lot. So you want to get in early. It is fast. I rely on what you tell me. I don't have what Jim Cramer has, a staff of people that can create the charts so he can hit the bongers and do that. Love the guy, love the show. But if you send me the charts you want me to cover ahead of time, in your invite, my email address, I will create them, and then we're whipping right through them. So that's one way to do it. In the meantime, if you need help, call our staff. Otherwise, take your cursor, move it up there, and away you go. I'm Ira Epstein. I'll see you tomorrow.